What if you could spot the big players loading up on shares before the price moves? What if there was a way to track where the smart money is flowing without relying on lagging momentum indicators? That's exactly what the accumulation distribution indicator helps us to do. In this video, I'll show you what it is, how it works, and how to use it to catch explosive moves early. In this video, we're going to go over 80 strategy setup, live chart examples, and divergence secrets. So let's get into the guts of the accumulation distribution indicator so that you understand exactly what it's really measuring. Here's the math formula. What this means is this indicator shows how much buying or selling pressure exists in each candle. If the close of the candle is near the high and volume is strong, that means there's buying accumulation. If the close of the candle is near the low and volume is strong, that means there's selling distribution. So the cumulative AD line, which is below down here, it adds each bar's money flow to the prior total. So the line builds up or down based on how much pressure is behind each move. So what does the AD indicator tell you? A rising AD line means net accumulation. Buyers outweigh the sellers. A falling AD line going down means net distribution. Sellers outweigh buyers. This can be hidden from price. That's why the divergences are so powerful. Let's go over some examples. So here's the chart for natural gas from this morning's session. So down here you can see the AD indicator. Here you can see the price chart. And there's a lot to unpack here. So I'm just going to start from the early part when the market was moving. So you can see there's a trend forming right here. Trend appears to be going like this. And if you were looking right around 7:30, you would expect it to keep going like this. However, if you're watching the AD indicator, you can see that here it makes a significant new high, but the AD indicator is topping out. It's making a double top. So this is a divergence. Right here we can see a high, a higher high. The indicator is showing a high and not a higher high, double top. What happened right after that? Pretty aggressive sell-off here. It was showing that it broke the trend. There's a strong trend going up this way. And right here, it looks like this is just a normal pullback. But you can see it's already starting to lose. It's already starting to have distribution instead of accumulation. So this is kind of predicting the future in a way. It's showing what's happening, where the money is flowing. As retail traders, we just try to flow with the smart money because they're the ones that move the market. So what this really means is that they were buying, adding shares into here, and then they kind of stopped adding shares into here. They weren't buying as much, even though the price was increasing more. And so it fell back sharply. So you could use this to your advantage. Let's look at some more examples within this as well. So you can see, this is a trend. And then you could also say there's a larger trend right here. This is also a trend. And so we see right up here, this is the top. This is a top. This is a top. This is a top. And this is a top. Right here is a high, higher high, a high, same level. So what this means is they're not buying more shares here. The price went higher, but there's no more accumulation than there was here. And so the price pretty much has to fall, and it fell sharply. And so this is selling pressure going down. So this is the same thing that was happening here with this small high, these two smaller highs. This is a larger high, like over time. Same concept of divergence. You could use it on the way down as well too. So you see we start to sell off. We're building a trend right here. And this looks like it's about to run right back up, So we sort of a low, high, a lower low. Oh, we made a higher high. But you can see this higher high right here, where it matches, is a lower high. There's a divergence, higher high, lower high. And that's really important. And that helped us predict what the price was going to do next. This is not more institutions buying shares. This is just probably short squeeze. They're still selling here. So you could pretty safely take a short in here. I mean, you'd be risking way up here, but you can see that we're distributing, we're selling. So there's just a lot of useful information in this indicator. You can't really use this on its own. You need to use other confluences, watching the trend, but this is an excellent way to find out what's really going on behind the scenes. Because if we just watch price, we're missing part of the equation, which is, are there more shares being bought? Price can move up for a variety of reasons. And we can see whether or not it's because of actual buying pressure. Here's a great example on the chart for gold this morning. So you can see, not a lot of movement here, not a lot of movement, selling off. So this is clearly a real sell-off. As you can see, it broke here. They're actually selling shares. It's distributing. And then right around 9 o'clock, you see a sharp spike down, and then a little bit of an uplift, another sharp spike down. So here we made a lower low. Here we made a double bottom. That is a significant divergence. What happened after that divergence? Uptrend. Downtrend right here. Downtrend, downtrending. Right here, we have a double bottom. So that proved to us that we were about to have a reversal. And we did. Now we have an uptrend. And what happened here? So we're trending up, higher, 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 lower. Here we go. It's a double top and lower. This is a divergence as well. See, that wasn't a straight line, but you see a double top right here. Right here and here. See a pretty significant downtrend. And we broke the trend. The trend is right here. Here's the trend, double top. So there's a lot of things that could have happened right here. It could have continued up. It's still just riding this trend. You could say that you could take it short just based on the double top. But now you have an extra confluence here showing a lower high. Down, down. And, the morning is still young. We'll see how this plays out, but it appears that it's going to continue to sell off here because we're making lower and lower highs. Here's a slightly different type of example on NQ. So as the market's opening, you can see that we're in a channel. It's trending up. Market opens up, up, down, trending up. And so what's happening here is it's not accumulating. It's going sideways while the market is trending up. So that's a divergence. And what happens at the end of this candle right here So this, we're hitting the end of the trend, not the end. We're hitting the bottom of the trend, so it should just continue on. However, right here, the index is making a lower low. You can see right in here, it's going lower than it was here. So price is going higher in this trend, but the distribution is lower. The AD is showing lower, and this predicted a breakout of that trend to the downside. This is a very short time frame trade, but as you can see, it's still incredibly useful. What's important to note with this indicator is you do not want to use it in low volume times because it's not going to be helpful at all. It relies on large movements of shares and capital to be effective. So use it after the market's open or in high volume times. Here's an example of it on Tesla on the daily chart. So you can see a large move up and then a sell-off. And as this large sell-off is happening, we can see distribution happening. And then here we have a trend going down, a downtrend. And right here we're hitting the trend and it looks like we're going to sell off more. But what's happening is this has changed trend. So the price chart has not changed trend yet. It's still trending down, but this is trending up. So there's a divergence there. You can see a double bottom start to form, but that doesn't really mean that it's not going to sell off further. You can see, it forms a double bottom many places and then continues to sell off. But here, the difference is we have this divergence. It's starting to go up. So now it's uptrending. And now as we see here, this is a higher high, and we have a lower high here. However, it's continuing to trend up. Right here, it's wedging. And so the index is basically telling us that it's going to continue up. This is not financial advice, of course, but that's what this chart is saying at the moment. Here's an example on CCL, Carnival Corporation, daily chart. We can see there's a sharp sell-off here over the course of a couple months on the daily chart here. But what was happening on the accumulation distribution line was it was not moving down. And in fact, it was moving up. This means that smart money was buying shares, accumulating, while the price was selling off. So the price was being manipulated to go down, whereas they were accumulating a large position. And so you can use this to sort of put the puzzle together, see what's actually happening. And as we can see now, it ran right back up. And so all this accumulation down here, they bought the whole way down, has now paid off significantly. And more accumulation is happening. And here it looks like, of course, this is not financial advice, but it sort of looks like it's forming a divergence here, where we have a higher high, but there's not a higher high here. So it looks like it's in for a small run down. What are some common mistakes when using the AD indicator? The most common is using AD on low volume assets. This will give you many false signals. And within that, low volume times. If you're trading on a shorter time frame like the 1 minute, you don't want to be using this in the aftermarket or Asian or London sessions if it's a US stock. Use it during peak volume times like market open and close. Don't ignore context. Don't use the AD in isolation. You can't trade just looking at this blue line chart. You need to understand the bigger picture. You need to have more pieces of the puzzle to understand what's going on. Use it as confirmation for ideas you already had. Don't chase moves without confirmation. And that's it. That's the accumulation distribution indicator. If this video helped you, drop a like and subscribe for more deep dive into trading strategies and